With us, Mr. S. Ravikumar, President Business Development at Bajaj Auto, joins us on the line from Pune. Hi, Mr. Ravikumar, and first of all, congratulations on what looks like a very, very strong quarter this time around. Can you take us through where the big bump up for you has actually come through?
No, in fact, I think number one is we are operating in an external environment in November and December on the back of this demonetization impact. If you see the numbers, for example, in the first half year when the domestic motorcycle industry grew by 13%, we grew by 18%. In October, both the industry and Bajaj grew by 7%. In November and December, when the industry fell by almost minus 16%, Bajaj had a 10% fall, and so taken together, October, November, December, industry fell by 7% and we fell by 3%. So relatively, we were doing much better on the back of a good product portfolio. But still, the demonetization impact is there, has been there, and it was there very much there in November and December. So that's why you see you saw the shrinkage in numbers, and relatively the three-wheelers were in domestic were very much affected because of demonetization. But that said, what we concentrated on was what we could do internally. We focused on the right products. V12 has come out, and Dominar has come out, and BS4 is behind us in terms of ramp up and technical and ramp up. So all that has been done very well. The forex realizations have been good at almost 67.7 as an average for Q3. On the back of all that, we have returned a very solid EBITDA of 22%. So that is the strength of Bajaj Auto. We focus on what we can do strongly, products, and then cost control, EBITDA, and of course market share improvement. The market share in the wholesale has improved to 18.5%, but in November and December, the retail market share has been upwards of 20%.
Okay, so Mr. Ravikumar, sure, yeah. That's good to hear. Retail market share has improved. This is Sonia here. Just wanted to check on the realizations because those have improved sequentially to almost 59,500 rupees per unit. What led to that improvement? Is it only because your premium motorcycles there are more amount of premium motorcycles selling? And do you think that there could be a continued improvement in realizations over the next couple of quarters as the Dominar starts to sell some more?
Yeah, of course. I think if I look at Q3 of last year versus Q3 of this year, I think there's been improvement of almost about 160, 170 basis points there in realizations. That has augured well for the company. The mix is certainly a story there, and the export realization has been good, as I told you. And going forwards, the Pulsar range and the Dominar and the Avenger and all that is going to add. It's going to be very. It's a very good, healthy mix as far as ARPU is concerned.
So what could be the exit margins for the business by the end of FY17? Sitting at 21% approximately at this point, do you think that you could end at these levels, by the end of the year, or are you looking at higher levels?
In Q4, certainly the input costs are slightly inching up. For example, aluminum this morning when I saw it was around $1,800. About a year back, it used to be around $1,450 or something like that to a ton. And in spite of all that, I think we are quite comfortable and confident that we will return our proverbial 20% plus EBITDA.
Some of your peers like Eicher Motors have had the pricing power to raise prices, especially in the months of, say, August and September before demonetization. What kind of pricing power do you think you can enjoy in some of your newer vehicles like the Dominar, etc.?
Dominar has been priced well. Its job is right now to get quickly to at least 10,000 plus type of a number. And And once that benchmark is crossed and the market shares are intact and it does volumes as it is expected, we can always look at improving the margins there. But even at current levels, the margin returned by Dominar is quite good. That said, we have always been very cautious and very careful about our profitability. EBITDA is ingrained in our DNA. And BS4 also will add to some of the costs going up. But we'll systematically pass it on and we'll protect our margins.
Okay, so you said you will hold on to 20% plus margins by the end of the fiscal. That's what you're expecting. If you can just give us one update on what's happening in export sales, because the volumes in exports fell almost 18% in the quarter gone by, and the latest we hear is that things have not picked up as much as expected, especially in areas like Africa and in Egypt specifically. For Q4, what kind of volume growth or what kind of deterioration in degrowth would you be looking at?
I would say that Q4 should be holding on to the same levels or marginally better than what Q3 returned. I should, for example, as you pointed out, right, there are a lot of trouble spots there. You mentioned Africa, Nigeria, the currency, Naira is 500 plus to $1 now. So that is a big pain area for us. And in Egypt, though the currency has settled at about 20, the market is returning, and I think we'll be doing better in Egypt going forward. December was a disaster, but Egypt is on a recovery path. In Sri Lanka, the story has been in the financing controls and the duty hikes. So that's another big area. But as I keep telling you in all the monthly interactions, we will play by the ear, month by month, as far as exports is concerned.
Okay. Just one final question then before we end the discussion. Now, what kind of volume growth or rather what kind of exit volumes do you think you could see both in the domestic business because of the new launches as well as in exports by the end of the year?
I think the demonetization impact will have to still fully pan out. Again, I will not at this point in time hazard any volume guesses for even Q4. So I think we'll have to wait for that to pan out now.
Okay, Mr. Ravikumar, we leave it at that. Thanks so much for joining us. So that's the word coming in from Bajaj